All right, welcome back to the channel, Crypto Trend Trader, and today we're going to be taking a look at our Bitcoin chart. What we're going to learn today is how to apply our Fibonacci internal retracements and Fibonacci extension targets. We're going to be doing so on our Bitcoin chart. We're going to be looking at Bitstamp on the monthly, but what we learned today in this video, with practice and time, should be able to apply to any asset class we want to look at, whether it's a stock, a crypto, or basically anything else that you can draw a chart for. We're going to be using our TradingView, which is a free, or they have upgraded plans that you can purchase as well, but it allows us to essentially chart many of the assets in existence or that are tradable on main exchanges. We're going to be looking at our Bitstamp chart today, as it has historically one of the most accurate and longest amounts of information, basically Bitcoin's entire history. And then of course we're going to start off on a longer time frame, and then we can work our way down to shorter time frames as we see necessary. Before we do get started, I want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. If you find yourself at any point in time along the way lost, feel free to go back and rewind, take a look at exactly what we're doing. If you have any questions, you can leave them down below as well. Hopefully you learned something today, and if you do, I'd like to think that you would subscribe to the channel as well. We do not only static videos and technical analysis, but we also do 3 streams every single week where we are live to answer questions, look at assets, and essentially just walk through these markets together. That being said, let's jump right in. So first and foremost, we want to pull up our chart here on the monthly time frame for Bitcoin, and we basically have this Bitstamp chart going back to when Bitcoin was $2, and it goes back in August of 2011. So it's basically from Bitcoin's inception. Arguably, you could go back to where it says $0. And then it takes us all the way up to $70,000 as well. And the first tool we want to use is all the way here on the left, and it is our Fibonacci retracement tool. So the first thing we want to do for a Fibonacci retracement is we need to identify a swing low and then a swing high. And the way we do that is we basically look for where is our lowest point on the chart to begin with, and then we're going to look for something that's identifiably, basically a top, or at least temporary top. So arguably you could try to start from here, but now as we look at this chart, it's very clear that this is going to be our first Fibonacci target. And when we place this tool on the chart, we want to go from the low to the high, and we want to click directly on those tips. But what I like to do is I like to extend mine out to the right, and then that actually lets us, through the retracement period that we go through, see essentially where those are at. So you technically should be drawing this from the low to the high, but I prefer to extend mine out to the right. So now here, when we're looking at this tool, we have various levels available on this chart. And essentially what it's telling us is from the low right here to the high right here, what percentage, when we have a pullback, are we going to come back to before we continue the predominantly bullish trend to the upside. And in this case, we can see from the low to the high, we have come down to and tagged almost perfectly the 236. Once we have that initial move down to the 236, we can confirm that we have selected a accurate low and high, at least for the time being. Sometimes this will be invalidated, and it's important that we have a validation and invalidation point for every tool or every bit of technical analysis we use. That way we have targets to the upside if we're bullish, we have targets to the downside if we're bearish, and then we have invalidation points for both our bullish and bearish targets, because the market is always right, and sometimes we're not looking at it correctly. There's nothing wrong with being incorrect as long as you can recognize you're incorrect and then adjust accordingly in real time. The last thing you want to do is get stubborn, find out or realize that you're wrong, and then not adjust accordingly. So in this case, we have come back down to the 236. We start to put a retracement back to the upside, or a bounce off of that level, and then we actually come down lower. In this case, the final retracement, or the wick down, does not bounce directly off of a key Fibonacci level. It bounces off of a previous support level, which was the high on the way up here. So here we have an internal high and a retracement, but here we have clearly a macro low, a macro high, and then a 236 retracement. So that being said, we're going to go ahead and turn this tool here. I like to use our greens and blues and white as our bullish targets to the upside for the retrace and then continuation. I used to like to use our Fibonacci extension tools in yellows and reds and oranges, as essentially we're going from a high to a low. It's just easier for my eyes to code it. You can do whatever colors you want. You don't have to color code them at all. But again, just consistency is the key here. So from our high to our low right here, we see we retrace about 30%. It's not directly off of a Fibonacci level. The initial level is the 236. Typically, once you hit that level, you confirm that the swing is valid, and then you go lower. In this case, the 382 would be the shallow or most bullish retracement before continuation to the upside. The 0.5 uses Charles Dow theory for a 50% move. So we move to the upside, we give back 50% of that move, and then we continue to the upside. And then finally, we have our deepest retracement, or the most common retracement. Many people call this the golden zone, which is our 618 retracement. It's a 61.8% retrace of the move to the upside, followed by continuation. And this is really the deepest retracement that we want to see before continuing the trend. Otherwise, we start to really threaten the overall trend. So in this case, we have a clear bull trend. We retrace back below the 236, and then we continue to the upside. So now, in hindsight, obviously, we can see where this has already topped out, but we can actually use our Fibonacci extension targets to target a external retracement. And when we refer to internal versus external, internal means we went from a low to a high, and we're inside the distance from that low to that high. An external retracement is when we go from, say, a high to a low, and then we actually break back above the previous high, and we're looking for targets to the upside. So in this case, let's use our same Fibonacci extension tool, and we're going to click that high right here, and then we're going to look at this low right here. And again, we can go directly to the low right here and just put it there. But what we actually want to do is extend it out to the right so we can actually see where that target is potentially plotting the high at. So if we just extend this out here to the right and we take a look, and then we'll just look at what we have here. So once we hit that previous all-time high, it's going to give us a 1. That's a 100% move from the high to the low. So that's just back to the previous all-time high or break even. And then we have some various Fibonacci extension targets. In this case, the 1.5, the 1.618, the 2.382, and then we have continue up here, the 2.618, etc. So now here we can actually see Bitcoin was trading extremely technically, because we came down and had that initial retrace, and then from the top to the bottom, we plotted our Fibonacci extension. And here the Fibonacci extension took us exactly to the 2.382 to the penny. So we can see Bitcoin is trading very, very clearly using these Fibonacci levels off of that. And we'll see as this chart develops that it gets more and more technical along the way. So now we have our initial wave to the upside, we have an internal retracement, and then we have an extension target of 2.382. So 238.2% of the move from the top to the bottom is our top for the next wave. And then what we're going to do now is we're just going to look at that same situation. So now we have our low right here, and we're just going to do the same thing we did off the start, and we're just going to fib from our low to our next high. So in this case, we're going to pick our low right here. We're going to pick our 2.382 as our high, and then we're just going to do the same thing over again. So that is from our bottom right there, and then we're just going to draw to the top right there. We will go ahead and just make this one green for simplicity's sake, and then actually we're going to go ahead and extend this out slightly further. So we can see when we start to retrace from the low right here to the high right here, essentially what we're looking for is the initial push down to the 236, which we actually consolidate at for quite a while. We're trading very technically, and then we start to basically get less and less of a bounce back to the upside, and then eventually we fall through support. And when we fall through support, we come down exactly to the 382, or the 38.2%. So we move from the bottom to the top, we retrace or give back 38.2% of that green move right here, and then at that point in time we start to continue to the upside. So now what we want to do is just the exact same thing over again. So now we're going to take from our high right here to our low right here, and then once again we're going to try to predict where our next wave is going to top out at. So if we take from our high right here and to our low right there, and then again we'll go ahead and switch this one over to orange, and then we're going to look for, once again, just to extend this out to the right, and then we're going to look for targets to the upside and where it looks like it topped out at. So once again here we can see Bitcoin is trading extremely technically, and once again from the high to the low of our wave right here in 2018, the end of 2017, to our low right here at about $3,000 in December of 2018, we now have moved up to the upside 1.618 Fibonacci extension target. So we essentially came all the way back up to the high. That is a 100% move, because we went from the high to the low. We retraced 100%. We broke through that level, and that's called a blue sky breakout. We now are at higher prices we've ever been at. And then we're going to look for our Fibonacci extension targets. We have the 1.5, which we overshoot. And then look here, we actually top out perfectly initially at the 1.618, or arguably you could say we go slightly above it here. So that being said, now we've actually seen Bitcoin has traded very technically. On the initial move up here from basically $0 to $1,168, we retrace roughly 30%. And then we have a Fibonacci extension target of 2.382. And then from our low right here to our top right here, we retrace exactly 38.2% in green. And then from our high right here to our low right here, we actually have a external retracement or Fibonacci extension target. We break out past the previous all-time high and go to new all-time highs. And that actually takes us up to our 1.618 Fibonacci extension target. So we actually once again see Bitcoin has topped out exactly at the 2.382, and then again it has topped out on the final or next wave at the 1.618. So again, we can see Bitcoin is trading very technically. The next thing we want to do now is look for our retrace from our low to high. So here we have from the low to our high up here. Now typically, based on what we're discussing, what we're going to do is from the low right there to our high right here. And now there's two ways that we can look at this chart in hindsight. Obviously, we would initially pick this as our high, and that's what we would go to, that initial push up. But then something strange happens actually, or unexpected, where we actually go slightly higher above that on a second push up. We're going to talk about that because that is it's an advanced, basically chart pattern or type of correction. So that being said, we go up to the high right here. We have an initial move down to the 236, and then we actually end up invalidating that previous high. So technically now we have to redraw our chart and put it up there. So we need to go slightly higher and respect that as actually the top. So now here we have a swing low, then here we have our swing high, and now we're looking for our retracement. So we initially came down to the 236, we get a bounce off that, and then we actually end up going lower. Now here we are at the 382 and retesting the previous all-time high. And now it's important that we pay attention to this because we've done something that we never did before. So I'm going to turn off the drawing tools for a second here, and we'll look at from here we have an entire cycle to the upside, and we have our high at roughly 1,120, and then here we have our low after our second cycle, and that takes us down roughly to 3,000, nowhere near our previous high. And then here we have our next cycle to the upside, and we have our retracement nowhere near the previous high, and then we go on our next cycle to the upside, and now we're doing something we haven't done previously in Bitcoin's life cycle, which we actually come back down and we threaten the previous all-time high. We actually have gone into this all-time high level. So now all of a sudden we have to be very careful because Bitcoin is no longer respecting what it has previously done in the past. So that being said, we're going to turn our drawing tools back on and we're going to pay attention to what we're seeing here on this wave up to the upside. And now here we are at the 38.2% retrace, or the 382. And it looks like we actually overshot it quite a bit, but we're holding there for now on our monthly chart. Now, what are the two possibilities that happen right here? This ends up being a 382 retrace with a small overshoot, and then we actually just consolidate and start moving back to the upside to new all-time highs and begin another cycle. Or we're just finding some temporary support at this level, and we're actually going to be going lower down here to our next previous Fibonacci high, which is our 0.5. So that being said, we basically know what we're looking for here. Now we're going to go into a little bit of advanced technical analysis. But that is our basic for how to do a Fibonacci retracement and a Fibonacci extension. So we're going to go ahead and wrap this initial video up here, and then we'll continue on in the next part of our Fibonacci extensions. So make sure that if you did get some value out of today's stream, or you found it interesting how much Bitcoin has respected our internal and Fibonacci extension targets, make sure to like and subscribe. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.